Hello everyone, tomorrow is a big day. We're gonna have the Fed Chair Powell speaking in the symposium in Jackson Hole. So you need to know where the key levels are in the markets, you need to understand where the markets might move and what's happening currently in those markets. So watch this video to be prepared to trade tomorrow and over the next few days, because the markets I'm going to go through, like EURUSD, EURUSD, CAD, Yen and the dollar index, they are trending and those trends are valid for quite some time. So take a look at this video and share it with your friends if you like it, and give us thumbs up also. I would really appreciate that. And watch this video only if you agree with this disclaimer and with the fact that we don't provide any investment advice. Okay, let's take a look at US dollar, because we are so often trading against the USD, whether it's gold, silver, oil or the major currency pairs, we are always trading against the dollar. So the Fed is considering diminishing their QE program, and tomorrow in Jackson Hole we hopefully get more indication on what the timetable might be, and the Fed funds futures are indicating there'll be a rate hike in the second half of the next year. So what's happening with this market? There was big move down to the downside, but now the downside momentum is slowing. It's waning, it's disappearing. So I think the reason is that we have so many technical factors down here. Both institutional and retail traders alike are watching this area. They can see that we have the trend line. They can see that we have a reactionary low here, and both the 20 and 50 period moving averages and the 23.6 Fibonacci retracement level. So this is a very key area. If the market now bounces higher from here, then there's a good chance that we get to challenge this high, the latest high, and maybe move even further, because then this would be a new higher low. The other option is obviously that the market just goes through the level, and then that's significant as well, because then the uptrend isn't in force anymore, and we probably go to the next important level, which is where we have this July low here, and we have basically this reactionary low and 38.2 Fibonacci retracement level coming together there. But at the moment we're still above this first zone, and the market is slowing down and waiting for the Chairman Powell to speak tomorrow. So I think we should be prepared to trade the volatility and just follow the market. I do not give investment advice, and I don't tell you exactly what's going to happen because I don't know. But the fact is that the market will tell you what it wants to do, and if you don't know how to read the market, and if you don't know how to trade these analyses that I give you, come to our webinars. They are free. It's TIOmarkets.com/webinars, and you come there and you get all your trading questions answered, and you get some tips and ideas on how to develop yourself and your strategies further. EURUSD in the daily time frame, it's approaching a level that we said is a key level, and we said when the market was down here and it was trying to get above this high, basically it was the level was 1704, and when it was here we said that if it gets above, it's likely to move to this green box here. And you can go to TIOmarkets.com/analysis and make sure that I'm not just inventing this, it's all there and documented. But the reason I chose this area is because the 20 period moving average was there at the time. Now it's a little lower, of course, but we also had 23.6 Fibonacci retracement and the recent reactionary high very close. So this is a key area, and as you can see, the momentum is kind of slow today. The market is moving sideways, but the day is not over yet, and so I'm just giving you a heads up on this. Kind of similar to a dollar index, because Euro USD is just the mirror image of the dollar index. Not exactly, but there's a strong negative correlation. So if the market now just starts to roll over from here, then we have yet another lower high, and there's a good chance that we move below the latest low and continue in the downtrend. But if we push higher, then that's obviously, we have to consider that option also. So if the market just keeps on pushing higher, we have another area here. By the way, the 50-day moving average is getting very close to this 23.6 Fibonacci retracement. So I don't think this is exactly an area anymore. It was earlier when I was looking at this a few days ago on 20th, August the 20th. This was where the 50 period moving average and the channel high was. That's why I highlighted this area. So maybe we can now get rid of the box there and just point to the high, the channel high there. So that's obviously a resistance there. So we have quite a few technical resistance factors up here, and that probably makes the traders think a bit. Also, they want to know what the Fed says before they position themselves very strongly. So everybody's following the Jackson Hole Symposium at the moment. Should the market be able to rally through the channel high, then the next significant area is up here. That's a 38.2 Fibonacci retracement and this high, so another confluence zone there. And that, I think, will be the first key level that the traders will focus on if the market breaks above this low, above this high. But at the moment, we're still inside the channel, and we just have to wait and see how the market trades. When we alerted to EURUSD being a buy candidate as it was breaking out of a base, I think it was roughly in May, somewhere here, and the market has rallied about over 700 pips, and now there's been a move lower. But the fact is that the market is still trending higher. You can see how the moving averages are pointing higher. The red is above the blue, so the 20 period is above the 50 period. And why this market is now interesting, okay, we have the upside momentum, but we also have the pullback. The pullback into a support. A previous resistance is now likely to be a support, and also because you can see the price action changing here. We had two quick down days and then sluggish move to the sideways. So the bears weren't so committed to this market, shorting this market anymore. And today the market has been moving a little higher. At the same time, the oscillator, the stochastic oscillator 5, 3, and 3 has moved into oversold area. So basically, there's a good chance that the market rallies higher. Obviously, I don't know the future, like I always say, but the probabilities are there. And the probabilities are increased if we get a move above yesterday's high and we can maintain those levels. Then we might get to see a move to the recent highs and maybe even further, because yes, we have another higher low in place. But if the market breaks yesterday's low, then I think the most interesting level is down here. Then we have the area that has been the 38.2 Fibonacci retracement area, or the area around this retracement level, where the market has found resistance, support, resistance. So it might be support again, especially because we have this channel low here now. So either way, this market is likely to be a market where you have either intraday or swing trading opportunities. And if you don't know how to trade these, come to the webinars. I'm more than happy to help you guys to learn and become better traders. And you know, those are great opportunities to ask any trading questions you might have. So feel free to join us. Yes, those training sessions are free. We are committed to helping you to grow and get better. So I'd love to see you there, and hopefully this prompts you to go to TIOmarkets.com/webinars and you can register for the next event there. CAD JPY is a market that we have been quite successful with lately. When the market was trading here on 16th of August, we said that if it breaks, if it indeed closes below this bearish wedge, then there's good, the probabilities are that the market will move to this low. Okay, this target was reached and breached, and since then the market has jumped higher a bit. A couple of days ago we said that the momentum is to the upside, gave heads up to our traders if they wanted to consider this momentum here. And now and also at the time we did say that the 38.2 Fibonacci retracement is a level where we might start to see slowdown in this upside momentum. So this is happening now. And as always, I'm looking at these key confluence areas and price action inside the levels or areas, mainly because nobody knows the future, so we just have to rely on what's happening with the price. And when it comes to key levels, and if it starts to roll over, then we know that the red team is driving the market down and there could be trading opportunities on the downside. If the market just keeps on pushing higher, we need to know that we have technical factors here that might slow the market down. So we have the 50-day moving average here and the 50% retracement level also. And we have this downward pointing trend line resistance. All those factors are something that we have to pay attention to. So let's see how this market trades, but now we are in overbought zone. As you can see here in the oscillator, this is stochastics 5, 3 and 3. It is in the overbought zone, and if the market starts to roll over, then the oscillator probably gives a sell signal, and those that trade based on indicators only might start to get selling there. So let's see how this plays out, and yeah, as always, trade safe and don't take too big positions and always use stops. Thank you so much for your time. If you want to learn more about the markets and trading and ways to develop yourself as a trader, come to my webinars at TIOmarkets.com/webinars. They are free interactive events and I really look forward to seeing you there.